Market crashes typically happen without warning, often on the heels of a long bull market run, during which stock prices steadily rise. The hallmark of a stock market crash is panic selling by investors, who attempt to quickly liquidate their positions to either curb their losses or satisfy a margin call. These are the biggest stock market crashes in history. The crash of 1929. This crash ended the period known as the Roaring Twenties, during which the economy expanded significantly and the stock market boomed. On October 28, 1929, the market plummeted by nearly 13%. It kept falling, down 12% the next day. The crash was followed by the Great Depression of the 1930s. Black Monday crash of 1987. On Monday, October 19, 1987, the Dow Jones Industrial Average plunged by nearly 22%. Black Monday, as the day is now known, marks the biggest single-day decline in stock market history. The remainder of the month wasn't much better. By the start of November 1987, most of the major stock market indexes had lost more than 20% of their value. Dot-com bubble of the 1990s. During the late 1990s, the values of internet-based stocks rose sharply. As a result, the technology-dominated NASDAQ Composite Index surged from 1,000 points in 1995 to more than 5,000 in 2000. But in early 2001, the dot-com stock bubble started to burst. The NASDAQ peaked at 5,048 points on March 10th. The index would go on to plummet by 76.81% until it reached a low of 1,139 points on October 4th, 2002. Financial crisis of 2008. Increased availability of mortgage debt appealed to both previously ineligible borrowers and investors, fueling explosive growth in mortgage originations and home sales. At the same time, consumers, many of them new homeowners, took on additional debt to buy other goods. Companies seeking to capitalize on the opportunities afforded by the surging economy also heavily indebted themselves. Financial institutions, similarly, used cheap debt to boost the returns on their investments. This debt-fueled stock market caused the Dow to reach a low of 54% below its peak in March 6, 2009. Coronavirus crash of 2020. The most recent stock market crash occurred in 2020 as COVID-19 spread worldwide. During the week of February 24th, the Dow Jones and S&P 500 tumbled 11% and 12% respectively, marking the biggest weekly declines to occur since the financial crisis of 2008. The Dow would go on to decline by 9.99% on March 12th, its largest one-day drop since Black Monday of 1987. Followed by an even deeper plunge of 12.9% on March 16th. However, unlike prior crashes whose recoveries required years, the stock market rebounded back to its pre-pandemic peak by May of 2020. Fueling that rapid recovery was an enormous amount of stimulus money.